Good morning, ladies and gentlemen. A very warm welcome to you back on Business Today television. Given the volatility in the market, the pain that the mid caps and small caps are undergoing, and the absolute refusal for the market to move up despite all that can be possibly done by the government, are reasons enough to get you to meet the finest brains on Dalal Street and try and understand what their thought process is, how are they helping their clients, themselves navigate these times. We are now joined by Mr. Gaurang Shah, Senior Vice President for Geojit Investments, a very well-known, lucid and intelligent market observer for the last 3 decades, and needless to say, one of the best dressed. A very warm welcome to you, Gaurang. As always, it's such a pleasure to host you. Please explain to our viewers the sentiment that you see on Dalal Street at this moment. Why is it that the markets refuse to move up?
Shelva, thank you so much for having me on your show this morning, and thank you very much for all those kind words. It's always a pleasure to interact with you on your channel, Shelva. So, look, the problem right now is that we recently made a new all-time high on the Nifty and Sensex, 26,300 plus on the Nifty, and so on and so forth for the Sensex. And then from that day onwards, we saw one day of a little bit of light of hope, and then we are where we are. And as we speak, Shell, the markets are actually corrected from the lows for an intraday basis. I would possibly, and everything, like you rightly mentioned, everything that has to go well has gone well, be it inflation, be it GDP data, be it GST 2.0, or be it like last night evening in form of Fed rate cut of 25 basis point. Needless to say that large section of the market had already priced that in, and it's a very different opinion that President Trump has expressed post the rate cut, and of course the relentless selling of FIs. One of the reasons for rupee weakening is also relentless selling from the FI. But my sense, Shell, is that, and of course, historically we always speak about December as a month when FIs want to go for their Christmas vacation and they need to liquidate and pay back their fat dividends to their clients and for themselves in terms of bonus. So possibly this Christmas party has started earlier than expected for our Indian markets in terms of sell-off getting intensified by the FIs. But I remain an eternal optimistic person as far as the Indian markets are concerned. And it is not that, Shell, that we are 10% down from the all-time highs. We are very close to the all-time highs, a couple of percentage down. So what? And markets always have a tendency of, after making a new all-time high, markets goes into a consolidation zone. I remain upbeat with the third quarter earnings, which will kick off from 10th of Jan 2026. And I'm also optimistic about the budget, which will be unfolded in the month of
Feb. Okay, fair point. Gaurang, we've always reached out to you to somehow defend the fall, and rightly so, unless you are able to buy the stock at an attractive price relative to its all-time high, the chances of making decent money in the medium term recede quite further away. But all I'm trying to say is that except for quarterly earnings, and of course there are green shoots there as well, everything that one could seek and hunt out is there for the Dalal Street. Retail investors are pouring in money like there's no tomorrow. Interest rate cuts, policy rates, everything has been cut. GST has been cut. In a normal circumstance, maybe 5-7 years ago, this market would have shot by 10,000 points on the Sensex and about 3,000 points on the Nifty. That is not what is not happening, and that is worrying.
Shell, I think the market has matured over a period of time. And like I mentioned, Shell, that, everything that had to go well has gone well. But there are times, Shell, you and me have been in the market for such a long period of time, and we witnessed these kind of phases in the market, if I can use that terminology, wherein market just refuses to move upwards and tends to go down on a little bit of profit booking and possibly consolidate. And markets, according to my wisdom, Shell, market will always test your patience. and your capability to withhold. If you succumb to those pressures, then you are a loser. If you are able to maintain yourself and stay invested and possibly even add to some of those growth stories that you have in your portfolio, markets have always rewarded you. Let me give you a very honest disclosure over here, Shell, that I have not stopped my SIPs. I have continued my SIPs, and in times like this, if liquidity is available at my disposal, then I'll also go ahead and do a lump sum investments. So my humble submission to all the viewers of BTTV and investor is that have patience, give it a little bit of more time. You will come out with flying colors over a period of time. Everything that exists right now will be a thing of the past. And one small disclosure that whatever recommendations that I'll be sharing, Shell, this morning on your show are a part of our research team recommendations. Our company, Jujit or I, we do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So, Shell, the point that I'm trying to drive home is that, yeah, small cap and mid cap are a pain point. I definitely agree. But not all is that bad in the mid cap universe. Sectorially, you still have growth stories over there which can possibly play out well.
Okay, okay. I understand, continuing with SIPs and it being the cornerstone of wealth creation. Now, share with us your view on why mid caps and small caps are falling like 9 pins. This is where the maximum retail interest is there. Fair point that it was a popular trade and it is now unwinding. But is there light at the end of the tunnel?
It has always been like that, Shell. And let me say this, one of the reasons why they have fallen off the rock is because of the large ownership, retail ownership. So there are times when markets will possibly try to scare the hell out of you in terms of the correction, especially with the small cap universe, not so much with mid cap. Mid cap also contributes to the downside, but small cap is something that leads the rally on the downside or the correction on the downside. Whether there is still light at the end of the tunnel, I definitely think so for some of the select mid-cap sectorial themes. For small cap, Shell, the problem that I have witnessed many a times is that earnings don't catch up, but the share price runs up. And when the earnings disappoint, the small cap universe falls apart as if there is no tomorrow. So that's the bigger, and yes, the problem also is that large part of our retail investors do get attracted to the small cap universe because of the price tag. That's also something that investors have to mature. Buy quality, don't buy quantity.
Okay, would you want to advise all those retail investors who went into the market directly and ended up buying mid caps and small caps, some of them very popular names, some of them which had shown very sharp rallies in 2024, 25, and are now stuck? Stocks like KNS Technologies, like Dixon, you can't find fault with them in terms of the quality of the management as also the rate of growth of sales and profits, but stocks, they have corrected 30-40%.
So there is an inherent problem from some of these names that you mentioned, KNS Technologies, Dixon, PG Electroplast, and unfortunately, I don't know, Shell, whether there was a strategy that was put in place, because a day after day, first you got news on KNS Tech, then you got news on Dixon Tech, then you got news on PG Electroplast. Management came and gave out their verbatim in terms of clarification. Nerves did not hold well, but the fact of the matter is that as a brokerage house, we remain positive on the entire EMS sector, semiconductor, chips, PCBs, etc. The two names that we have coverage, one of them is of course PG Electroplast and the second one is CG Power. Government has done a lot for this sector in terms of incentives, PLI, making provisions for quicker and faster execution because of the dependency that India had on countries like China and Taiwan as far as the chips and semiconductor and the PCBs are concerned. And unfortunately, certain accounting principles, there was a little bit of mismatch And the also fact here is that all these names did run up fantastically over the last year and a half. And so is the reaction in terms of downward movement. But I don't think there is a serious negative impact in the names that we have coverage.
Okay. Now, should there be a change in strategy at this point of time, Gaurangji? Should people shift their, investments by and large to large cap funds, flexi cap funds? What is your crystal ball telling you 6 months hence, 1 year hence?
I hope I had one, honestly, Shell. But yeah, the fact of the matter is that, yeah, large cap have always given you return, and that's time tested. You and me know that. And my portfolio also tells me that in terms of my SIPs into large caps. But I also have a small portion in select mid and large caps. Small cap is something that I have not ventured into. So I would say that, and again, I am making this statement from a point of view that a very lay investor is some audience that I have to address to. And those people have very, very low risk appetite, share. So if you are going into small cap, first of all, be prepared to have an elevated risk appetite. If you're going into mid cap, maybe a lesser level of elevated risk appetite. And if you're staying with large cap, then a relatively lower level of risk appetite. Because large cap is something that, pays you over the longer period of time. Small cap, the problem is it will test your nerve and patience, and you may end up taking a wrong decision when your NAVs are down, when your portfolio is possibly making 15-20% loss. You will exit and then repent it over the next 6 to 12 months. So that's what you should possibly, if you have an elevated risk appetite, fine, go for small caps, but not, then stick to the basic principles, large cap and select mid caps.
Okay, fair point. That's a sensible thought. Now, a view on the rupee. What do you feel? Life starts beyond 90, and this is one of the reasons probably why foreign funds are not putting in money. In any case, traditionally they have withdrawn money in December. So, is this one of the reasons why you feel that Dalal Street is even more impacted than what it normally would have been in December?
I think, Shell, a little bit of this is also to do with this, I would not call it flip-flop, but the delay in signing a trade agreement between India and US. There are almost a time when the verbatim that we hear from US administration that we are virtually on the verge of signing a trade deal with India. Then something happens and our government and our representatives say that no, we are not going to give in to any kind of pressure. I am for that, Shell. I'm 100% for that you cannot put a gun on my head and tell me to sign on a piece of paper. It has to be a win-win situation for both. So somewhere I feel this delay in trade agreement, because it was told by October, then it was November end, now we are in the middle of December, possibly whether it will happen this year or not is a big question mark, and that is one of the reasons I feel, whether I'm right or wrong, I don't know, FIs are taking flight to safety. Possibly they will again think of coming back once this deal is signed, sealed and delivered, and possibly the budget unfolds. So my sense is that if FIs have to come back after trade deal is signed, before the budget, then they look at the budget, and possibly somewhere mid of Feb or end of Feb or maybe beginning March, they will start coming back. But again, I would drive home one single point, Shell. We made a new all-time high when FIs were selling left, right and center.
No, I think that shows about the resilience of the Indian market. The only issue here is that, as I have said earlier, and as you know from your own personal experience, 90% of the investing class is in small caps and mid caps. Now the issue comes, that is traditionally what the market teaches you. A popular trade is not necessarily the one where you make the most money, and they have fallen on their face. Now if you are a mutual fund investor, fine, it's the fund manager's responsibility to find a good trade and exit a wrong one. That's done. लेकिन इशू तो ये है कि सब लोग टिप्स पे काम कर करके उन्होंने अपने पोर्टफोलियो का कबाड़ा कर लिया. अब उनके लिए क्या राय है, उन्हें क्या करना चाहिए?
Well, Shell, that's the sad part. People time after time, experience after experience, they end up doing the same mistake. Like, आपका 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 सवाल का जवाब में एक शेर से गालिब साहब का एक शेर है, उससे देना चाहूंगा.
क्या बात?
कि उम्र भर गालिब एक ही गलती करता रहा, धूल चेहरे पर थी और आईना साफ करता रहा. So, see, there has to be somewhere, some point, Shell, you need to recognize where you are going wrong and undo that mistake by doing right things. You can't, it's your hard-earned money, Shell. And like I mentioned, look, I'm not saying that small cap doesn't make money. It makes money. I'm not saying that mid cap doesn't make money. It makes money, but it also tests your patience, which a lot of our retail investors don't have. I'm sorry to say this. I may be saying hard words, but these are the facts, Shell. You need to realize and you need to mature and stop doing those mistakes.
Fair point. I think that's well explained, and especially in the markets where the cost of learning is hugely expensive or painful, is what the markets and new investors are about to find out. At this point of time, Gaurangji, the market has separated the winners from the has-beens, those who have fallen. Now, what is the research team? What is your research team's latest output in terms of potential buys in the market at this point?
So let me list down sectors, Shell, for the benefit of your viewers. And I am extremely upbeat about some of these themes which you have already discussed over the last couple of quarters and years. My sense is that the entire BFSI segment is preparing itself for a takeoff, whether it is select private sector banks, select public sector banks, select strong NBFCs. We had a rate cut recently. So this year, 2025, we have total rate cut of, I think, 1.25%. We are in a very comfortable zone. I think the world started to cut rates later. We were the first ones to move in terms of rate cuts because of the data points, whether it is inflation at a very comfortable zone and below the elbow room of the Monetary Policy Committee and the RBI governor, beat the GDP growth rate. Of course, 8.20% is not something that will go on. The run rate is not going to go on to that level. We may possibly settle down a little bit lower, but even then we are better off. And of course, we have good corporate earnings. Government policies will help corporate earnings to deliver. So my sense is that sectorially, BFSI segment is something a must on your portfolio. Then comes autos. So that's the second one. Third one is cement. Fourth one is themes related to the capital markets. Fifth one is capital goods and engineering. And possibly if I have to stretch my gray cells, then I will definitely bet on IT from a long-term point of view.
Okay. Would you care to share the top picks in these sectors via GeoJeet?
Yes, so let me put it down. I'll try to limit the names so that your viewers don't get lost in the entire gamut of universe of investments. So I'll start with public sector banks, State Bank of India and Indian Bank. These are the two names that we are positive on. In the private sector universe, Axis Bank and ICICI Bank. Of course, we have positive coverage in others also, but I'm limiting my choice. In the NBFC universe, lot of names are there, but I again stick to the two names, Bajaj Finance and L&T Finance. In the defense universe, there is a company that is not really spoken about much, but has been an outperformer, and that's called MTAR Technologies. MTAR Technologies. MTAR Technologies, Cochin Shipyard, Masgaon Docks. One more I would add to defense is BEL, Bharat Electronics Limited. In the autos, M&M, Bajaj Auto, TVS Motors, Ashok Leyland. These would be the picks. In the capital goods, in the capital goods and engineering segment, L&T and Siemens are the two picks. In the capital market related themes, there is a company called CAMS, Computer Age Management Systems. So these would be, some of the investment themes that possibly one should look at.
Brilliant. What a lovely exposition of the state of play, and of course the top picks. What we will do on the Business Today Twitter feed, as also on our individual feeds, we'll add these stocks as quality picks for the medium to long term from Geojit Securities. Gaurang, as always, thank you so much for your time. A Merry Christmas, a Happy New Year, and here's wishing you all the best, my friend.
I wish you all the very same, Share. Likewise to you, to your family, and to your entire team. Thank you so much.
Wonderful. That, ladies and gentlemen, was Mr. Gaurang Shah, MD at Geojit Securities, speaking from his heart, as also from his deep expertise that he's gleaned from Dalal Street over the last 3 decades. Thank you for watching. Please continue with Business Today Television. There is a lot that's going to happen on the other side of this break.